All right. Hello, everyone. Welcome to After Hours Trading. My name is Barbara Armstrong. The bell has rung. The trading day is done. And so, if you're interested in investing or trading, how might you approach things if you don't get to look at the market when the markets are open? And so that's what this class is going to focus on. Next week, you will see a new name for this class. And when we came up for this name, we had in our minds what we were going to do with this class. And then they, announced, 24/5 trading for stocks listed on the S&P and the NASDAQ and all of that. So the title of this class has been a little bit misleading. So we are not going to be talking about placing trades outside of regular market hours. What we are going to talk about is doing analysis after hours so that trades can fill during the regular market day to both get into a position and get out of a position. So let's say you work a full-time job and your hours to look at the market are between 8:30 and 10 o'clock at night. Or maybe you're an early riser and so you'd like to look at the markets between 5 o'clock and 6 o'clock in the morning. But the markets, if you're in the Eastern time zone, don't open until 9:30. And how can you make an informed decision? Because one of the challenges about trading, even though it's now possible to trade in after market or outside of market hours, so either after the market's closed or pre-market, sometimes these stocks are very thinly traded and there can be a lot of volatility. And if you're a conservative trader, that can lead to a lot of angst and wild fluctuation in prices. And so I just wanted to do a level set. So if what you are looking for is a way to trade something in those after hours when they might be very thinly traded, then this is not for you. But I encourage you to stay because I think that what we're going to cover in this class is super exciting. I think that you can place and some of these trades, during the market hour if you want. But if you're one of those people that lives a really full life and if I wasn't doing this, you know what I would have been doing today? I would have been on a ski hill, or in the summer I might be hiking somewhere or something. And so I might be one of those people that prefers to get up and look at the market either first thing in the morning before I go off and do whatever fun thing I'm going to do for the day, or at night. And these trading strategies we're going to talk about, I used to trade extensively because that was what my life was like. And so even if I was traveling, I'd get up in the morning. These are very specific rule-based trades. And I'd get up first thing in the morning and before the market opened. And if I was in California, which meant Pacific time, it meant I was getting up pre-crack of dawn, even in the heart of summer, to follow these rules. So today we're going to talk about a flag trading strategy. And I'm excited that you guys are here for it and along for the ride. If you are not following me in the land of Twitter or X, I invite you to do so. My handle is at Barbara Armstrong CS. We also have the privilege of having Connie Hill with us in the chat. And Connie is a friend and a fellow coach. She knows all these trading strategies inside and out. And so we are going to work together to create a trading plan for a flag trade. And if you're not sure of what a flag trade is, I encourage you to check out the Getting Started with Technical Analysis series that we just started afresh in January. I'm just finishing laying out a new curriculum for that, but one of the weeks will be trading flag patterns. And so we're kind of skipping ahead here. But yeah, so let's get through our important information so that we can get out to the platform, have a quick look at what went on in the markets today and this week. And then let's look at some examples and create a trading plan together. Okay, so know that everything that we cover in this class is for general information and education purposes only and shouldn't be considered or construed as a recommendation to trade any particular security or strategy in any particular way. We will trade options in this class. And today we're going to do both a stock trade and an option trade. But know that options carry a high level of risk and aren't suitable for all investors. We're going to use the Paper Money software application on the Thinkorswim desktop. And I have an account that we're going to use just for this class. Okay, so we're going to use it just for this class so that we can kind of track our results over the year, over the course of the year. And it makes it pretty easy to follow up on things. When we use stop loss orders, it doesn't guarantee that we'll get out at a specific price. You know, there isn't a guarantee there, and we'll talk about that as we discuss stops in class. Okay. Okay, so we are going to go out and take a look at, first of all, what's going on in the market, and then we're going to talk about a particular strategy today. In fact, we're going to talk about two because we're going to place two trades, but we're going to go into detail on one. So if we look at the S&P 500 today, hit a new all-time high. And, you know, Chicken Little was kind of warming up in the yard there for a hot minute as Santa decided to skip the rally, you know, in December. You know, rather than seeing a nice rally, we saw about a 5% pullback, which, you know, had a lot of people feeling a little angsty. I don't know, anyone else feel that way in December? You know, and then we got to, you know, the middle of January here, January 13th, which turned out to be a lucky number. And, you know, it's been going up with only one down day ever since. And, you know, today hitting a new all-time high. So pretty darn bullish, wouldn't you say? If the market's hitting a new all-time high. And if this is a one-year chart, if we look at the last year, you know, the last 12 months, up 25%, you know, which way outpaces what this market, you know, what the S&P does in an average year over the last 30 years. It's more, you know, closer to 12%. Yeah, somebody said, yeah, I was sweating bullets. Yeah, you and me both. And then the NASDAQ, it too had a bit of a pullback, right? Like, and that was even, you know, a little steeper, almost 7%, you know, and yet it too maybe didn't hit a new all-time high today. But, you know, it has rallied quite dramatically and is within a stone's throw of it. And, you know, over the last year, it too up almost 26%. So, yeah, the bulls are definitely in control. And then how about the Dow? Look at that over the last few days, like just like skipping up and, you know, not at a new all-time high, but that's a pretty dramatic rally. And for the technicians in the crowd, you know, we had this fairly steep pullback, and you'd call that a diagonal resistance breakout. And it just hasn't, it's had one down day since it broke out. Yeah. Yep. And the last of our four indices that we tend to look at is the Russell, which is the biggest of the small boys. Now, I say small boys, you know, this is 2,000 of the biggest of the small caps. Some of these are billion-dollar companies. And I wouldn't say I was such like a small fry. If I had $1 billion, makes me think of, what's the name of the Canadian band? If I had $1 million, the Bare Naked Ladies. I'd buy really expensive ketchup. Yeah. So anyway, the Russell, it too, you know, a little more modest, only 17% in the last year, but you know, yeah, that certainly beats a poke in the eye with a sharp stick, doesn't it? And then how about our VIX? Well, down under 15. So, you know, if we were to draw a line, like that's in the lower end of the range of certainly where it's been for the last, you know, 6 or 7 months, right? Okay, let me have a quick drink. All right. Now, which of the sectors have been leading the pack? So if we come to public and come down to S&P 500 sector indices, it'll pull up this list, and I've customized this watch list to have a description in it. If you're not sure of how to do that, and I see a lot of, the usual suspects in this class, but if you're not sure of how to do this, if you subscribe to the channel and then go to the playlist titled Trade Management Mini Sessions and scroll down to the bottom, there are a bunch of quick and easy Thinkorswim tutorials, and one of them is on how to customize watch lists. So we've had consumer discretionary leading the pack, which kind of warms our hearts because we have $1 million account here that we started with, and we have one stock in it, and it happens to be a consumer discretionary stock. It is Amazon. The communication sector has been really strong. Financials have been strong, and information technology. So these are the four that have been leading the pack over the last 3 months. When we come and we look at the last month, we're seeing energy all of a sudden starting to pick up the pace. Like after, I call this a Tums chart. It just gives you indigestion looking at the big swings here. And then it kind of had a Humpty Dumpty move, fell pretty dramatically. But in the last month, it's making a bit of a comeback. Industrials have been really rotating into favor. And of course, financials, have continued to be strong. And, within a stone's throw of their all-time high, right? And then consumer discretionary had a bit of a pullback, but, this whole sector breaking back out. The same thing with, technology. Okay, so I want to look at, let's first of all, because trade management is important. So we're going to come and we have two positions. One is on Amazon, and we bought 100 shares back on January 3rd. And we bought those shares for $222 a share. They're now trading at $235. Now, we bought this as a growth stock, and this is something, one of those mini sessions talks about how to customize your monitor tab. This has a days column in it, which really pertains only to options. And so we don't want that in there. But what I'd really like to see is what the net liquidating value of this is. And I'd also like to see, as a percentage, how much we're up. And so we are going to type in net liq, and here's our net liquidating value. We're going to add that as a column. We're going to type in profit and loss, and we'd like to see that as a percentage. So we're going to add that as a column. And then, and these are customized per group. And so you'll see here now that with Amazon, I didn't get rid of days. So let's go back and get rid of that. Days, remove. Okay. So now we've got our trade price, the current price. We can see we're up almost 6% since we bought this, 5.73%. Now this is an unrealized gain. And we all know what the market giveth, the market can taketh away, right? Yeah. Okay. So let's come now and look at a new position. We're going to look at GoDaddy. Now, we're going to pretend that we inherited $1 million. I wish that was my reality, but so far hasn't happened. But let's say you inherited $1 million in cash. Net liq is the net liquidating value. So if we come here and we say, were I to sell my shares, the value would be $23,542. And if we come and we, let's add a column. Well, I've got this column here, Scratchpad. So for this class, I don't want to cut. So we started with $1 million, and our max position size is 50,000 or 5% of the account value. And you might say, well, I think that's too high. I'd rather it be like, 2.5%. Like, you can make it whatever you want, but just for our example. And then our max loss per trade, we made it 1/3 of 1%. Now you could say, well, I'd rather it be half of 1%, makes the math easier. That would be 5,000. And I just made this up as an example of, if you inherited $1 million, or if I inherited $1 million, or some trader did, or investor, how, what rules might they establish for themselves out of the gate? So these are our rules out of the gate. Okay. Okay. So we are going to look at a stock today called GoDaddy. Now, GoDaddy over the last year has almost doubled in price, gone from 106, it went up to 211. That's pretty close to doubling, I would say, and it's currently up 92%. And so you could say, well, thanks for telling me, now I feel badly that I didn't buy it a year ago. But, if you had bought it here, you might have said, geez, it's gone up so dramatically, I've missed the move. Or how about if you bought it here, you may have felt you missed the move. Or how about if you bought it here, you may have felt you missed the move. And we may be saying that, 6 months from now. And so what types of things might you want to look at? Well, if we come to our Analyze tab, this is in the tech sector. Is that a strong sector? It has been, yes. It has been a strong sector. If we scroll down here and say, well, what kind of track record has it had if we look at this annually over the last 5 years? Well, just year over year between, 22 and 23, it was up 75%. It went from, we can see here, it went from in 2020 losing $3 a share to in the positive to the tune of 142, went up to 219, which is modest, but still pretty significant. Went up to $9.08 a share in 2023. We don't have numbers yet for 2024. How about sales? They have steadily, kind of climbed the hill. What about asset turnover? So you can come and look at all of this stuff. One of the numbers that some people might be interested in is their price earnings ratio. So what does PE ratio tell us? It says, how much money do I have to invest to generate $1 of earnings? The 5-year average is 21. Currently, that number is 12.3. Now, if you're looking for a value stock, some might say they want that number to be under 20. So that sitting at 12 is a pretty attractive number. So you might say, you know what? I'd be willing to add this to my portfolio. I'd just like to own it and buy and hold. And so we could do that. And so if we come and look at a shorter time frame, now, where do we put our stop? And this is something, I have some friends that I've had somewhat heated conversations with. It's just saying, come take my stock. And what do I mean by that? Well, if we really want to be in this for the long term, we might say, hey, it recently came down to this price and this low was 189.45. So I'm going to put my stop 3% below that. And so if I take that and I multiply that by 0.97, I'm going to get 183.76. And this stock actually, was not trading when I looked at this earlier today, quite as bullishly as it ended up closing the day. But we're at 207.09. So if I say, okay, let me just come back to my scratch pad. Well, I'm going to come to my watch list. We won't be using that again. So I'm going to switch this to a calculator. So if I say I'm willing to pay this 207.19-ish, if we come to the trade tab, you'll notice quite often that the bid-ask spread gets really wide in the after hours. You know, like this is 205.60 to 207.50. You know, that's a $2 wide spread for something that's usually maybe a nickel apart. And why is that? Well, because if it's very thinly traded in the after hours or it's not traded, they have to put something in, so they make it wide. And this is one of the disadvantages of trying to trade in the after hours. And so if you say, okay, I'd like to buy, I can buy up to $50,000 worth of stock, so I could buy 200 shares. But if I'm going to pay $207 and the last price it traded at was 207.19, and I'm putting my stop at 183.76, how much am I risking? I'm risking $23.43 a share. So if I buy 200 shares, as I was planning on doing, which is a $40,000 position, I'm risking more than 3,300, aren't I? I'm risking about 4,600, which breaks this max loss per trade rule. And so what I might do instead is say, well, I'd like to buy 200 shares, but in order to honor part B of my position sizing rules, which is my max loss per trade, I'm going to put in an order for 100 shares. And when I get in a position to be able to move that stop up, then maybe I can add to my position. So I'm going to right click. I'm going to buy custom with a stop. We're going to buy 100 shares. And this is saying 207.50. And you might say, I'd be willing to pay 207.25 or 207.30. But if it goes above that, I want to revisit that. So I'm going to change this. And this is saying I'm willing to pay up to 207.30. But if it's more than that, then don't fill the order. So it's saying this is the top amount I want to pay. So I'm going to make this 207.30. And that's a day order. So if it doesn't fill tomorrow, then it won't get filled. And then I'm going to put my stop in at 183.76. And you may be saying, like, are you insane? Like, why would you be risking like 10% in order? Like, why would you put a stop in that is so much lower? And I don't know why this is. Okay, let me just come and put this in again. This is really weird. There's something kind of wonky going on with this that it won't let me adjust my stop. See, this day has come over and it's not letting me change it. Well, let's just put the order in and then we can add the stop. So we're going to just say we want to buy 100 shares. We're going to make this 207.30. And notice this is a day order. So this means it won't fill in the after hours. It will just fill during the normal trading day. Okay. Okay. So we're putting that in, and that is teed up to fill tomorrow. And we're going to put that as a growth stock. Now, in our stocks for growth, I don't know why that it wouldn't let me put that stock in, but I'll go in and add that if it fills tomorrow. Now, what if when we look at it tomorrow, it's trading at 235? Well, then we may choose to do that. Now, we could do the extended orders. We could. But the idea behind this is that we want it to trade when there's more volume being traded. Okay. Now, the second trade that we're going to do, and this is one where we're going to create an example trading plan. So this is called a flag target. And so, we've inherited this money and we'd really like to invest it but we'd also like it to generate some income for us. Let's just say we'd like it to do that. Example, whoops, flag target example trading plan. And so if we look at this chart on GoDaddy, what we see here is a flag. And we've seen this, if we go back out to our 9-month chart, we've seen this happen several times. So what do I mean by a flag if you're new to the concept of a flag pattern? So I'm just going to get my drawing tool going here. So you see the stock came up here and then it pulled back for a couple of days and then it continued on. And we saw that happen here. It came up, pulled back. You know, this was actually less of a flag because it came back, went up again. Now, had we traded that as a flag, that one wouldn't have been successful. But this one then came up again, pulled back, came up, pulled back. Now, GoDaddy, along with the rest of the market, you know, in December, pulled back. But now what we're seeing again is another potential flag pattern. So how might we trade that if we wanted to do a shorter term trade as opposed to a longer term buy and hold? Well, the idea of trading a flag, and we're going to come to a shorter term chart here. And I'm just going to hide these orders so they're not distracting. So we're going to measure this distance from here to the top of the flag. So that's about, it was about $17. I measured it a little bit earlier. Yeah, it was just over 17. So call that 17, we'll call it 1710. So from this bottom candle to the top was about $17.10. And then we had a 1-day pullback. Now we saw here, this was only a 2-day pullback. This was a 2-day pullback. This was a 2-day pullback. And the market in this last week, we've seen a lot of these kind of 1-day pullbacks. And then today, it moved quite bullishly. And so if we look at this and we say, as part of our example trading plan, what are we looking for? Well, when we look at the what to buy component of it, we want a stock that is uptrending. And we also want stocks that are heavily traded. So you want something that trades on average a million shares a day or more. Million shares a day plus. And then we want to see this flag pattern. Okay, so that's when we're looking at kind of what to buy. You know, that's the pattern that we are looking for. I just want to draw this, bring this down. And so that's what this pattern that we're looking for. And then when do we enter? So our entry, so this is kind of when to buy. So our entry is when we have a hold pattern. That stands for a close above the high of the low day. So, or for it to trade above the high of the low day. So what's the high of the low day? 207.06. And our entry is going to be our entry is going to be the high of the low day plus 20 cents. So we almost made it to that today because our high of the low day was 207.06. So we're going to add 20 cents to that. makes the math pretty easy. So we would buy only if it goes above 207.26. Okay. Do we massage that rule based on the price of the stock? For this trading plan, we do not. So, you know, it closed today at 207.19, you know, 6 cents shy of that. And that's okay. So then where would we put our stop on this trading plan? It's going to be 1% below the low of the low day. So now we have our entry and we have our exit. It is 1% below the low of the low day. Do we eyeball this? No, we're very, very specific with this trading plan. And our low for that today, or the low day, was 203.96. So we're going to multiply that times 0.99. And so our exit would be at 201.92. Okay. And so that is when we would get out. Now, how do we manage it? Because, you know, how long are we expected to be in here? So our expected time frame, you know, when we have a flag target, and then our flag target, how do we determine that? Our target is going to be our entry price plus the length of the flag. So for us in this example, our GoDaddy example, what would that be? Well, our entry price is going to be 207.26, and the length of the flag was $17.10. So 207.26, so that's 224.36. That's going to be our target. And our exit is going to be that 201.92. Now, our expected time frame is somewhere in the 5 to say 20-day time frame. Okay. Now, if you're doing a swing target, which is like with this example here, we can't really do a swing target with a one-day pullback the way this pullback occurred. But if we were looking at this one, a potential target would be the previous high. The flag target would be this length here repeated. Okay, and then again, when this pulled back, when we had our entry above the high of the low day, which would have been on this day, is when you would have got in. You know, it would have made a big move. It would have gone past your swing target. So our expected time frame when we have a flag target, this is a flag target example, is 5 to 20 days. If it was a swing target, it might be more like 3 to 5 days. Okay. And then this is important. What are our mid-management rules? So it hasn't hit the target and it hasn't hit the exit. So one is, and this wouldn't apply to this particular trade because of the way it's structured, but when it hits the swing target, when the price hits the swing target, or what the swing target would have been, move the stop up to the purchase price. Okay. Or the entry price. And then if you have, this is a bullish trade, if you have a bearish candle, you're going to move the stop up to 20 cents below the low of the bullish candle. And how often are you going to look at this? Every single day, either every morning before the market opens or every night after the market closes, whatever you want your routine to be. And how disciplined are you going to be with this? Vary. So if you don't want to trade and be that active, then this wouldn't be a trading strategy for you. The first one that we did with GoDaddy, where we were doing a buy and hold, might be a better fit, but that's not going to generate a return where you're going to see a realized gain or loss in a shorter period of time. That then, if you wanted to make that your, project money or vacation money or, whatever it is, you could use it for that reason. So this is for someone who wants to be an active trader, but who can't trade during the market hours. Okay. So let's go in and put this trade in. So, and this is not, this is not a beginner level trade. So if you're here for the first time and you're going, wow, like my ears are bleeding, my head is spinning, just know that it may feel a bit like drinking out of a fire hose, but we're going to do this with a stock. Now, can you do this with an option as well? We can. Actually, let's do this one with an option. We're going to buy a call. And so we're going to come to the trade tab. This only trades monthly options. Do we have a lot of volume when we come out to March? Here's our open interest, and here's our volume. So one of our rules when we're trading options is that we want there to be at least 20 contracts on the books. And we might be in this for up to 20 days and a February 29th, February 21st expiration. That just doesn't give us enough time, even though there are a lot of contracts. The other thing is, in the after hours, it's really hard for us to tell what the bid-ask spread might be during the regular trading day, because similar to how this is $2 wide right now, the bid and the ask, the bid and the ask on the options can get very wide in the after hours as well. So actually, given the lack of volume, we're going to do this as a stock trade. So we're going to come in. We are going to buy custom with an OCO bracket. And we are going to make this first one good till canceled. And the next two are going to be good till canceled also. And then we're going to make this a market order. Why am I doing that? Well, because I only want to enter this trade if and only if GoDaddy goes above 207.06. So if it goes above 207.06, we'd like to buy. And if it doesn't, we're not interested. So we're buying if and only if it goes above 207.06, we're hitting save. So that's our entry. Now, when do we want to get out? We want to get out when it goes up to 224.36, 224.36, or if it doesn't go our way, our stop for this one is at 201.92. $201.92. Confirm and send. Now, I will often, and I'm not making this up, but it was suggested when I was a client back in 2011 that you might want to read your orders out loud to yourself. And I still do that. I want to buy 100 shares of GoDaddy at the market price if and when it trades above 207.06. Does that make sense? It's at 207. It closed at 207.19. Yeah. I want to sell it when it goes up to 224.36. Does that match that? Yes. Or perish the thought if it comes down to 201.92. So it will trigger a market order to sell. Now, you may be looking at this and saying, why does this say open to open and this say to open? It's because this order isn't in the system. It's assuming that these orders are opening orders also. But as soon as this order fills, you'll see that this will switch and become to close orders. So we are going to put this in our group, and we don't have a group for it yet, but we're going to create a group called Stocks with Targets. And we're going to put a note in here. So if we're going, how did we come up with that target? We're going to call this a flag target. Okay. Are there any questions on these rules? I know Josh has kept Connie very busy answering a bunch of questions about pre-market trading. Yes, we do have earnings coming up on February 13th. So we might, our expectation with this flag trade is that we would likely be out prior to that. Yes. So if it gaps up really high before the market, you might want to check this. This might also be part of your routine with this strategy, is to make sure that it hasn't gapped up. The way you create groups, and thank you for that question. Excuse me. I'm going to show you. So one, you can come over here and you can come to these three little lines and say add a group. And it'll bring up a little box and you're going to say, I want this to be stocks with targets. Excuse me. So now we have a group called Stocks with Targets. And once this fills, we can add it. Now, if you haven't subscribed to the channel, this is where, I'm going to put in my little subscribe to the channel plug and say you'll want to subscribe to the Trader Talks channel on YouTube. When you go to that channel, the first thing it will bring up is whatever class is currently being taught. But if you come to playlists and scroll down and you're looking for trade management mini sessions, and if you scroll to the very bottom, you'll see all these Thinkorswim tips. And there's one on the monitor tab, and I show you how to customize each group, create groups, all kinds of stuff you didn't know. There's one on customizing charts. There's one on customizing the watch list, all kinds of stuff. So you may want to check that out. Another one I'd encourage you to check out is The Power of Compounding. And this is one that you can show your parents. If you are a parent, you can show your kids or your grandkids. And it's one I've been meaning to do for a very long time. I will do a mini session and create an example trading plan for this strategy. And this is where it will live in this blue section. Okay, so guys, excuse me. That is a wrap for today. Please hit the like button. It helps move this up in the algorithms so that more people can find this class. Excuse me, all of a sudden, there's been dusting happening in my house today, and I'm allergic to dust, believe it or not. Like, what a benign thing to be allergic to. But regardless, if you'd hit the like button, subscribe to the channel. Don't forget to follow Connie and I in the world of X, Connie Hill CS and Barb Armstrong CS. It's another way for us to be of service to you outside of webcasts like this. And keep on coming back. I'll look forward to seeing you in Trading a Smaller Account tomorrow. This is our last webcast for today. And Lisa, you're right. We're going to be talking about 4-day live strategies. This is a blast from the past. So take care, everyone. Have an awesome day. Thanks to Connie and the guys behind the scenes. Bye for now.